Hello everyone. Yes, I've started the session 2-3 minutes earlier so that everyone can join in. Yes, all of you quickly join in and then we start. Hello Unnati. Hi Harsh. Hello Krishna. Good to see you all. We'll just wait for a minute or two. Everyone can join. Hi Rajkumar, Madhav. Hello. Hi Yash. Yes, hello and good afternoon to everyone. So I hope you all have revised. And in case if not, definitely we will expect, and that's our sincere advice that you should revise and sit. But even now, you have 5 minutes. Quickly go through what we did yesterday. As you all know, every day we'll do a quick revision and then we'll move ahead. So that helps us to maintain a link. Plus, we'll be more active for today's class if we know what happened yesterday. Hi, Yukta, Mohit. Yes, quickly go through what all had been done yesterday. It's good to see that you all also join on time. That's really nice. I'll always appreciate that fact. Because now through this virtual mode, even that 1 minute, just waiting becomes a bit odd. Hi, Ekta. Okay, I believe most of you have joined in. So now let us quickly start. Yes, come on. First, you will all tell me the pointers, whatever we did yesterday. I'll just quickly, note everything down again. So it's a quick revision for you plus for me. We'll know what all we've done up till now. Keep telling me the points. I'll be writing those points. Plus, we'll do a quick discussion. Then we'll move on with today's class. Okay. So, Krishna says we learnt about accounting equation that we have to do in detail today also. Accounting equation was 1 point. Okay, I'll come on to those. Then, yes, cash transaction, credit transaction. Yes, Unnati, dual aspect. Cash transaction. We learned what are credit transactions. I'm just noting down first credit transaction, dual aspect concept. Yes, the golden rules of accounting, and especially from traditional point of view. Golden rules of accounting. We have done the traditional approach. Definitely we'll require practice. We didn't practice so much. So today is our session where we'll be just practicing the traditional approach and the modern approach. Traditional approach. Then, hi Dipesh. Debtor and creditor, yes, we understood quite many terms that we'll be using in accounts very frequently. So debtor, creditor, cash transaction, credit transaction, business, goods. Weightage of chapters is now mostly done. And weightage of chapters I told you, but I'll never say that keep your study oriented to the weightage, that this chapter has more weightage. You should study everything, and everything is linked, and everything is the base for your inter and final levels. So In fact, if I want to tell you now this basic, if you ask me from CA Foundation point of view, they are not going to ask you these normal journal entries. Good soul to Ram. What's the journal entry? They'll never ask. But if you don't know this, then in your entire life, accounts can be a problem. So everything is not just exam oriented. If our concepts are clear, then definitely we'll clear exams, that too with good marks. Debit and credit. Yes, in debit and credit, we use the word deber and creder. Those are Latin words. Yes, we said that Luca di Borgo Pacioli is the father of accounts who developed the double entry bookkeeping system. Okay, so now I think most of the points you all have covered. So we said that first of all, we understood that cash transactions are those where there is immediate settlement of cash, and credit transaction are those where the settlement happens at a future date. Okay, and then we came on to dual aspect concept, which says that, just a second. We came on to dual aspect concept, which says that in accounts, every transaction which you record in the books of accounts should have two effects, debit effect and a credit effect. Debit effect and credit effect, and always the total of this debit will be equal to the total of credit. At every single point, the total of debit and total of credit will match. Then we said that actually there is no meaning of the word debit and credit. It just represents the two sides of the account. Debit is the left side of the account and credit is the right side of a T account. What are these T accounts? We'll come into more details later on. Right now, we've not understood how to make that T accounts, right? Yes. So we just understood that there is a debit, there is a credit. Debit is the left hand side, credit is the right hand side. Then after that, we'd come on to the traditional approach. In traditional approach, we understood, one second, I'm saying there are some doubts. Ma'am, I have a doubt about the purchases. Yesterday you said that purchase will come in not in personal, I said in real account, but in final accounts we write it in P&L account by treating as a nominal account. Very good question, Deepesh. Very nice question. I'll come to that question. Ma'am, can you explain once again about purchase, how it was real and I'll come on to those. Yes, your doubts are clear, and that is why I told you that purchase part and those 5 elements of financial statement. So that we have to start with today only. I just told you that I'm just writing it, and from the next class we'll be discussing it more. Okay. So first, now I know everyone knows the meaning of debtor, creditor, business, goods. I don't think all these things are problem. We understood traditional approach. So quickly, I'm just writing it again. In traditional approach, we said that accounts are classified into personal and impersonal, and in personal account, personal and impersonal. And then in personal account, we have natural personal, we have artificial personal, and we have representative personal accounts. Right? We had a good discussion. If you have doubts, you let me know. Else, I can assume that you know natural personals are or natural human beings, Ram account, Sham account, Geeta account, Jyoti account, Unnati account, Dipesh account. Artificial personals are wherever there is a business entity, bank, Raj Traders, Unnati and Associates, Reliance Industries Limited. Okay, so all these were clubs, societies, etc. And representative personal accounts, where we said that we are using some other word maybe which represents either a single natural or artificial person or either a group of natural or artificial person. So there we had come on that capital is a representative personal account because capital actually represents the owner. Then we said debtor. Debtors are what? Debtors are our customers to whom we have sold goods on credit. Creditors, they are our suppliers from whom we have purchased goods on credit, right? Then in case of impersonal account, we said real account and we said there are nominal accounts. Now, here also we had understood one sentence that all real accounts are assets, but all assets are not real account. Assets include real as well as personal accounts, receivables. So except for receivables, I can say every other asset is a real account. And those are basically are things, but they can be tangible or intangible. Right? And we had listed down a few points here also. Intangible, we said car, machine, furniture, land, building, etc. In case of intangible, we said goodwill, patents, copyrights, etc. And then we said that nominal accounts are expenses, losses, incomes, and gains. Expenses, losses, incomes, and gains. Okay. After this, when we understood this in detail, we also learned the golden rules of accounting. So for personal, the rule was debit the receiver from business, whoever has received from business, and credit the giver, whoever has given to business, we will credit him. In case of real account, the rule was debit what comes in and credit what goes out. Whatever comes in the business will be debited, whatever goes out of the business will be credited. And third was the nominal account, where the rule was debit all expenses and losses and credit all incomes and gains. Right? So I believe this revision I'm doing fast because yesterday we were at a good speed and we were going slowly and understanding each and every point, except for that purchases. Yes, your doubts, definitely I have to do that. But I hope no one has any doubt up till here. I'll come on to purchase. I have to discuss sale of goods, purchase of goods. Those things I'll be discussing today. But except for that, if I use these words now, can I assume that you all are clear with this? The application is left. See, my dear friends, I've just explained you the points. Right now, I cannot assume that if I say a word, you will be able to tell me what is real, personal, nominal. No. And how to apply the rules, that also we didn't do. We just hardly did 1 or 2 entries. So today, the whole time, today is our application based class only. We'll be understanding the traditional, we'll be understanding modern, and we'll be applying to many transactions. Today, actually, we'll be going into recording stage. But right now, I can just, what I want to assume is, or what I'm believing is, whatever we did up till yesterday, except for the last point, I hope till there it is clear. Okay, good. Okay, thank you so much. Now, with this, I had discussed one more thing. I told you that finally the statement of P&L, and now I'm coming on to accounting equation approach also. And yes, your doubts I know, and I'll take it. So coming on to your statement of P&L and your balance sheet as finally, oh sorry, I've written BNS. As finally the main objective of accounts is to provide information to the users of financial statements, and financial statements is the statement of P&L and the statement of balance sheet. So we said that all the nominal accounts come in the income side, all the nominal accounts come in the trading P&L, the expenses on the debit side, the income on the credit side, and the capital comes, balance sheet is a statement of assets and liabilities. Assets, liabilities, and capital is also written on the liability side, right? In one sense, you can say that the business has to pay back to the owner, but though we know that owner and business is same, only for accounts, only as per separate entity concept, the owner and business are not same. Just to maintain the business books of accounts, we separate business from the owner. Okay. And then I'd said that if suppose income is more than expenses, and if there is a profit, the profit belongs to the owner, and profit will be added in capital. In case if there is a loss will be subtracted. So with this capital plus profit, we came on to the word equity, right? That capital is the basic amount invested by owner in the business. You can use the words interchangeably at this level. I'm telling you, you can use the words interchangeably. But since the word equity is also very commonly used, thus I'm using that capital plus profit is equity. And with this balance sheet, we could also derive the accounting equation, which say that equity plus liabilities is equal to capital. Okay. Now, before moving ahead, now I would like to come on to your points. Okay. So I'll stop this here only. Now let us discuss. See, I was talking, then I came on to the point that purchase. If we purchase goods are a kind of assets for us. Yes. Today I've purchased goods, the benefits will be received when I sell it. So till the time the goods are for me, and what are goods sale? Mainly held for the purpose of resale. We had discussed the meaning of goods also. The item in which I am regularly trading for the purpose of resale. So I can purchase goods, which is an asset, and I can purchase all the other assets also. Other assets can be furniture, car, machine, etc., etc., everything. So goods, stock, inventories, everything is same. Huh? Please, my dear friends, do understand this. Goods, stock, inventories, all are same. Okay. Now, we had discussed that if I purchase goods, stock, or inventories, I debit the purchase account. I debit the purchase account. Whereas all my other assets, when I purchase all the other assets, I debit the respective asset. Furniture account debit or car account debit. Why I'm using the word debit now? Because whenever I'm purchasing, it is coming in. As per my golden rules of accounting, real account, debit what comes in. So I'll debit the respective assets. Furniture account, machine account, car account. So we were discussing that purchase account, I told you, is a real account. I know that you guys have been told in your 11th and 12th that purchase is a nominal account since it's an expense. But I beg to differ here. And that is where somewhere, see, we know what has been taught in 11th and 12th. With due respect to whatever and however it is taught in 11th and 12th, but there are some technicalities. Like I told you all that you all are already diamond. I just have to polish a few things. Because in 11th and 12th, we are just being taught, okay, this is an easy way so that you all will also understand. No question will be arisen. So they tell you that purchase is an expense. But if you see from the definition, what's the definition of expense? Matlab, how do we bifurcate expense and asset? I told you in both, if I do an expense or if I purchase an asset, in both cases, there is an outflow of cash. You all agree? I am paying. But in case of my expense, the benefit is consumed there and then. However, in case of asset, the benefit is being received, but it is still receivable, right? The benefit is not over yet. So when I have purchased these goods, till the time I have not sold it, don't you think it's my asset? Yes, do you all agree with me that when I purchase the goods at that time, I am purchasing for the purpose of resale. Again, I'm saying that's why it's my goods. That is why I've debited purchase account. But up till now, it is with me. The stock or inventories is lying with me. So it's my asset. That is why it should be real account. Okay. First, is this clear up till here why I'm saying real account? I'll come on to Dipesh's question because he has asked very correctly. Okay, ma'am, you say I'll agree it's real account. But then now you tell me, ma'am, we have learned trading PNL account and that trading PNL account, PNL account, you only told us right now that this trading and PNL account contains nominal accounts. So we write purchase in the nominal side. So you are also agreeing that purchase is nominal account. No, let me tell you that word purchases. See, the goods when I'm purchasing at that time they are real account because it's a benefit. When I sell finally, at that time it will become a kind of expense. And now you will see in the CA Foundation modules, and that's the actual word. Actually, purchase is not my expense. What my expense is, cost of goods sold. I didn't want to introduce this word right now, but to answer the patient's question, I will have to introduce. To my science friends, I would say that if you're not able to understand this part, it's okay. We'll come into these parts in more detail. But right now, unless and until I don't explain this, then it will be very confusing and Dipesh will always have a question mark. In fact, not only Dipesh, there can be many of my friends who can say that now we are confused. Because ma'am, two things are there. You are saying purchase real account. If I agree to this, okay, I agreed because you are saying. But then why it is coming in trading and PNL? There are too many concepts also behind it. When I'll come on to final accounts, at that time I'll go into concepts, because right now if I start explaining, we'll move on towards final account. But first is the recording stage. Right now I just want to say that my expense is that amount of purchases which I have sold. Can you get it? Right now I'm just saying my expense is that amount of purchases which I've actually sold, which is sold, and that is nothing but cost of goods sold. So I believe some of you might be knowing what's the formula for cost of goods sold. If you guys know, or even if you don't know, I'll write it down. But If you don't understand this part, again, I've told you that you don't have to worry, because there are again some terms like opening stock. Now, what is opening stock? Some of my fine science friends will ask. So just note it down. Even if you don't note it down, it's okay. But I think Dipesh is from commerce, so I believe you will be able to understand. Opening stock, that is the stock which was lying at the start, plus goods purchased minus goods which are still left in the closing stock is cost of goods sold. Or in fact, if I simply tell you, cost of goods sold are the cost of those goods which I have already sold. As the name suggests, cost of those goods which I have already sold. That is actually a nominal account. That is an expense. Am I clear here? And now, like I've told you, don't refer the modules or my notes right now, but you will, in your module, you will see a word like adjusted purchases. Again, this is a term I didn't want to introduce right now, but yes, your question was valid, so I'll have to use this word. What are adjusted purchases? Adjusted purchases is nothing but purchases minus closing stock. That is, if I remove closing stock, how much goods, if I, except for the closing stock which is still left with me, those goods which are being sold. So adjusted purchase is a nominal account and normal purchases are a real account. Am I clear? Dipesh, is your doubt a bit cleared? See, I can still understand that maybe now you're, ma'am, this word we've never heard in your life. Yes, I know. No, none of you must have heard this word. Adjusted purchases always gets introduced in CA Foundation only. But yes, I thought I'll introduce at the time of final accounts. Right now, we are too early to, come up to this word. But again, if you have any doubt in your mind, you can tell me. What I want to tell you is that in trading and PNL, you all must be knowing that we write purchases here, we write sales here. But there are many other things like opening stock. There are things like closing stock. To all my friends who know trading account, if you don't know, it's okay. It's okay. Let it be. This actually we compare all the cost of goods which was available for sale minus cost of goods which was already sold and the cost of goods which is still left. So opening plus purchase plus direct expense minus closing stock. This is actually my expense. That part of the purchases which I have sold is my expense. What purchase minus purchase return is just net purchases. I'll come on to those words today. Ma'am, now what is purchase return? Let me tell you, purchase return is also nominal account. Purchase return is also nominal account. We'll come on to those words today. Okay. Adjusted purchases, if you don't understand, it's okay. But Dipesh, tell me, Dipesh and every one of you, can you just understand one part? What I want to stress here is the goods which I'm purchasing till the time I have not sold is not my expense. Once I sell that goods, it's an expense because benefit is consumed. It becomes an expense. And those goods which are still lying with me is still my asset. So that stock is again real account. Am I clear with just this one sentence right now? Even if you don't understand COGS and adjusted purchases. Dipesh, I'm waiting for your answer. It's okay, you can ask me again. And yes, I'm telling you that most of the things you will understand more. Let a few more classes go, you will understand it better. But is at least you are a bit satisfied, that is important. And see, I would have come on to final accounts, but there are my science friends, so it will be, harsh for them if right now I go into that area. Then it should be treated as asset till it is not sold. Yes, purchases is actually asset till the time it is not sold. And whatever amount of purchase which is sold now, that is only called adjusted purchases. And then it is treated as nominal account and that is taken to trading and P&L. But now again, see, that is taken to trading and P&L, but there is a way to show. So how they show? Opening stock plus purchase and then closing stock comes on credit side, or I can subtract here. This closing stock is that part of purchases which is still left with me, and hence the closing stock is shown in the asset side. Am I clear? So that part of stock which is still left with me, it is real account. It is shown on the asset side. I hope you can agree on that part. Because see, if you ask me, ma'am, purchases is nominal, then why do you take it to trading and P&L? Then I'll take you why stock is taken in balance sheet. So you'll say, ma'am, stock is real. Now stock and purchase is actually same, no? The word is same. It is in case of stock we use purchase account. Yes, only the stock at the year end is an event. Now I'm coming on to the word events and transaction. So that event, finally, that event we consider as real account and in the balance sheet. Actually, that is what Dipesh beta, that part of purchases which is still not yet sold, which is still there with us, is treated as an asset. And yes, you see that in your balance sheet you find the word stocks or inventories. Okay, only in that case we don't write the word purchases. Today, gradually, see, I believe all of you have been using golden rules of accounting up till now. Yesterday, I think I told you all that it is not that scientific method. It's not that good method of teaching debit and credit. In 11th and 12th, since golden rules of accounting is taught, today also I am also forced that first I should teach you golden rules of accounting to tell you what all you had already done. But now, wherever you were mistaken before, not mistaken, you were being told that's why you were following, but that was the wrong way. That was the wrong way. So I can say that it was the wrong way. Now I'm telling you the correct way. Now we'll go on to the modern way of way of accounting, the modern rules of accounting, and you'll understand it's much more better. It's much more scientifically proven. So I'll come on to those points. If up till here, if my answer is satisfied, just then say yes so that I can move ahead now. And yeah, we'll come on to these words. Okay. Are you all a bit satisfied that the stock or that purchases, whatever is left, which is not yet sold, it's still an asset, and the part which is sold is an expense. So then it is taken in trading and P&L. Good. Okay. Dipesh, again, I'll wait for your answer because I don't want that you feel that, oh, ma'am just left that topic and no, I don't want to leave that topic and go. But yes, there are some things which you've still not understood. So I am not going into much detail. Else we'll, shift from the conversation. Okay. Okay. So now coming on to this term only, coming back. So we had understood that the goods when they are purchased, if we purchase goods, then it is taken into purchase account. So now again, I believe now you all are starting to write with me. It goes in purchase account and that is a real account. You can mark a star here and write. If you are confused, you mark a star here and write, ma'am, in exam, in CA foundation exam, in case if they ask me what is purchase, real or nominal, write real account. The answer is real account. I can show you the module, the answer is real account. But even not going from the module, it's logically real account. Okay. Adjusted purchases is a nominal account. But again, adjusted purchase, what is it? Leave it right now. Leave it. Let us understand the basics, then we'll go on to those words. Don't worry. Okay. So you can just write down purchases is real till the time goods are being actually sold. Goods are being actually sold. Okay. And for other assets, we debit the respective asset account and that is also real. We debit the respective asset account and that is also real account. Okay. Am I clear? Here we stopped yesterday. Yes, and coming on to the 5 elements of financial statements. But before that, now coming on to sale. Since we discussed about purchase, let us discuss about sales. Coming on to sales, now I would say that sales of goods is actually your income. Do you all agree? When I'm selling goods, it's my income. It's my revenue. And sale is a nominal account. Okay. In fact, one definition of income, I told you that what is income? Whatever benefits we receive from expenses is nothing but an income. Like I am using this electricity, maybe I'm paying to one of my technical man who handles all my technicalities. I'm giving salary to him. I'm paying him, but I'm using the benefits, the services he gives to generate income. So that is also my income. Okay. Sale of goods is income or nominal. However, now again, when I come to sale of other assets, so sale of goods comes in sale account. We take sales accounts. So what one more thing you can see, especially Yukta beta. Yukta, are you there? Yukta, can you see that in case of goods, instead of writing goods account, When I purchase goods, I write the word purchase account. When I sell goods, I write the word sales account. Why so? Slowly, steadily, I'll come to the question also why. Right now, I'm not going because there are some concepts which I want to explain you before that. But today, let us understand debit and credit first. I told you we'll not go into all concepts together because then again, first you should understand basic debit and credit. Then I'll make you understand those concepts and I'll come to this question back. Why do we credit sales account? Ma'am, for other assets, when you are purchasing the asset, you are debiting that asset. And even when I'm selling the asset, no, it is real account only. I'm crediting the asset. Credit what goes out. Because selling of asset is not my means of earning revenue. Sometimes I have to sell my asset. Maybe it was not needed. Maybe it was outdated or whatever the reason is. So only the profit or loss on sale is a nominal account. But as it is when I sell the asset, I'll say real only. Credit what goes out. And it is credited in the respective asset account only. Okay. It's credited in respective asset account. But for case of goods, you will never open a goods account. Never. You will never open a goods account. You will say purchase account, sale of goods, sale account. And sale is my income, nominal account. Again, I'll wait for a minute. Any one of you having any doubts in your mind, kindly clear it off. I don't want a single question mark. You should be there. If you again have any doubt, tell me. Yes? Can we move ahead? Okay. Okay. Now coming on to word purchase return, because I know some people of you must be waiting that then what about purchase return? Now again I would say purchase return. We purchased goods and the benefit was not received. It was our asset. We are giving back the goods. It is real account only. So even purchase return, now purchase return will be of goods only. Purchase return of goods is real account. Goods are going out. It is not our income. See, in fact, here comes my, question to your golden rules of accounting. Ma'am, your golden rules of accounting? Yeah, I'm saying your golden rules of accounting because that you were doing in 11th and 12th, right? So if I apply golden rules of accounting and if you were told that purchase return is what will you say purchase return? So you all know, to all my commerce students, I would say you all know that purchase return we used to credit. What is the basis? What is the basis? Debit the receiver, credit the giver. Here, that logic is not going. Debit what comes in, credit what goes out. That reason goes, but then you should agree that it's real account. Then only you can apply the logic, credit what goes out. Yes, the goods which I purchased, it's going out. That is why credit. But you were using nominal account. And nominal account rule is debit the expenses or losses, credit the incomes or gains. Is my purchase return an income? Now you are able to understand. Are you able to understand my question? I hope I'm being a bit clear that are you all getting it? That now why should I credit purchase return if it's a nominal account? Tell me, come on. You have a reason, please ask me. Huh? It has to be a two-way communication. It doesn't mean, see, never you should think that, okay, our teacher is saying, so she's right. No, 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 no. What's there in your mind? You should expense decrease, so credit. Yes. Rajkumar, correct answer that expense decreased, so credit, but expense decrease, expense increase is taught in modern approach. Expense decrease, expense increase is taught in modern approach of accounting, which I'll be going towards. That is why I'll be suggesting you all also that right now I'll be taking few examples today after teaching you modern approach, few examples which we'll be doing from traditional also, from modern also, both. But from next time, I would always, my suggestion to you all will be follow the modern rule of accounting. It is much more scientifically proven as compared to traditional golden rules of accounting. If we purchase goods is debited, then we credit it to decrease it. Yes, I know your answers are correct, but yes, that is as per modern approach. Then your golden rules of accounting are not working. Okay. Okay. Okay, chalo. No, here as it is, we are not fighting with each other, or we are not fighting with anyone. We are just coming on to the point that if we understand modern rules of accounting and if we follow those, they are much better. That's the only point. Yes, and coming on to sales return. So let's understand what is sales return. Yes, sales return will be nominal account. Sales return will be nominal account. Okay. Which account will be for purchase return? Purchase return will again be real account only, Yukta. As per traditional approach, purchase return will be real account. And sale return will be nominal account. Right now, I'm on traditional approach only. Now I'll come on to the modern rules. But in case of traditional approach only, these things are the major problem. And I know that when you all will open your the institute's material for the first time, and when you will see this, you all will be shocked. And then you will think maybe the module has done some mistake. It's the CA's book. There is no mistake. And all these things are there in your chapter 2. Okay, so in our chapter 2, when we'll go the first accounting process, I told you chapter 2 is accounting process. The first unit is all about these definitions, golden rules of accounting, modern rules of accounting. There you will see that purchases, they are writing real. So today I am explaining that only, that when you open the module and you are seeing the answers, it's not wrong, it's perfectly correct. What we were doing in 11th, 12th is somewhere wrong. Ma'am, why was it taught like that then? It was an easy way to teach. Then your teachers used to explain you in that way, it was very easy to teach. So you guys never had any question. Okay. But ma'am, we can use the rule of nominal also in case of purchase return. See, the rule of nominal is debit the expenses, credit the income. Purchase return, how can it be my income? Purchase return is just, you will say decrease of expenses income. Decrease of expenses actually not income, no? So today, say a simple example, in this COVID scene, all of us decreased our expenditure in one way, right? Maybe my infrastructure. Up till now, I had a physical classes. Now everything is online. So, and there's no need to pay rent. My expenses have decreased, but do you think my income increased without any reason? So can I say it's fine just because expenses decrease, income increase? No. The first 2 months of complete lockdown, I had no income. So expenses decrease, but there was no income. So what should I credit? Okay. And in case of purchase return, goods are again coming in. Purchase return, goods are going out. Okay. I'm confused. But for real, we debit what comes in. Yes, purchase return is credited. Dear Yukta beta, purchase return is credited. All my other students, I hope all of you are also there. Some of you are quiet today. Ma'am, what these people are discussing. I hope all of you, being a very good listeners, are listening to it properly and you will understand. Just let a day or two go, then you will understand. Okay. Yukta, purchases is debited because debit what comes in. Okay. And purchase return is credited because credit what goes out. Purchase return means I'm a stationery, is enough stationery. I purchased calculator, but it is not as per my specification. I give it back. Credit what goes out. So purchase return account has a credit balance. Okay. No issue. Please. None of you have to be sorry for anything. What you are saying is in your mind. It's okay. And all of us can be right or wrong. Okay. That is why I always want whatever is there in your mind, kindly write it down. Plus, that helps. A single question of Dipesh helped us to go into so much details. So every time have the habit of questioning and don't hesitate. And I will never want that anyone laughs on your doubts. In fact, no one should. We learn so much when we ask a doubt. And every one of you should have a habit of asking doubts. Keep on asking doubts. It's okay. So purchase return has a credit balance and yes, sale return is debit. But we'll go on to that also later on now. Am I clear up till here? So yesterday where I had stopped at purchases, now I believe I'm able to explain you that purchases are goods. It's real account, debit what comes in. When we have, give the goods back, whenever there is a purchase return, that's also again a real account. Credit what goes out. Okay. Yes. Right. Okay. Thank you so much. Now, after this, I had then come up to one more point, and that was, wait, that was accounting equation approach. Accounting equation approach has basically come up from this balance sheet only. We can see that capital plus profit and liabilities. Capital plus profit is nothing but my equity. Equity plus liabilities is equal to assets. I told you that as per our dual aspect concept, the total will always match. The total of debit and the total of credit will always remain same. Okay. So we came up to accounting equation approach. And now what does this accounting equation approach? So if I elaborate accounting equation approach, equity plus liability. Oh, I'm so sorry. I've written it wrong. Yeah. Equity plus liability is equal to assets. I'm so sorry. Equity plus liability is equal to assets. Okay. Now, equity is nothing but capital plus profit. Can I say that? Plus liabilities is equal to assets. Do you all agree in this definition, in this formula which I've written in green? Yes, you all agree to this? Capital plus profit plus liabilities is my assets, true? Okay. Next. Okay. Now, can I say that profit is nothing but income minus expenses? Income minus expenses. And then plus liabilities is equal to assets. So I hope now all of you agree with my formula which I've written in black. Yes. Yes, all of you are with me up till here. Very good. Now, can I open this bracket and say capital plus income plus liabilities is equal to assets, and this minus I am taking on the right hand side, so it becomes plus assets plus expenses. Yes, do you all agree? So finally where we finally came up to a point where we are saying, I hope you all are copying with me. So finally we came on to the point where we are saying that capital plus income plus liabilities is equal to assets plus expenses. Yes. And if you remember yesterday, before the class got over, I had written these 5 elements as the main elements of financial statements. So whenever you prepare a financial statement, there are 5 things which you require. One is the capital, income, liabilities, assets, and expenses. Yes. Do you all agree? Okay. So now finally through accounting equation approach, I am taking you towards the modern approach of classification of accounts, which says that accounts should be classified as capital, income, liability, assets and expenses. Do all of you know the meaning of these? Somewhere in our discussion in the last 3 days, we've discussed the points: what is capital, what are income, what is liability, what is asset and what is expense. Is any one of you having any doubt in these words? All of you know prima facie the meaning of these words? Yes? If yes, then I'll move ahead with the rules of accounting here. And if you have any doubts in these 5 words, tell me. Okay, good. Now coming on to this point, this side, the capital, this capital, income and liability as per modern approach, they say that capital, income and liabilities have a credit balance, and assets and expenses have a debit balance. This is what modern approach says. So modern approach is very clear. I just wanted to relate because everywhere we are on the point of dual aspect concept where total of credit always have to match total of debit. The debits and credits will average, always match. Okay. So now I'll write it properly. So now you can say that as per modern approach, accounts are first of all classified as, I hope is everything has been noted up till here. So can I move the screen like this? So as per modern approach, accounts are classified into capital, liabilities, income, expenses, and assets. And they say that capital has a credit balance, liabilities will have a credit balance, income will have a credit balance, expense will have a debit balance, and asset will have a debit balance. Okay. Now remember this part also. If you want to increase credit, see I told you in the start only that in accounts debit and credit has no meaning. Many of the commerce students feels debit means add, credit means minus, and that you come because of the real approach, debit what comes in. That is why I don't know, some students do keep thinking that debit means plus, credit means minus. No, I will say that debit and credit is nature of an account. I would like to explain you in this way also. Let just take an example. I'm drinking a juice. Okay, I'm drinking a juice and the juice is sweet. Sweet is the nature of that juice. If I want to increase the sweetness, I'll add more sugar, right? So here I would like to say, if you want to increase credit, you will credit it more. If you want to increase liabilities, you will credit it more since it's a credit balance. If you want to increase credit, you will credit. And if you want to decrease the credit account, then you debit it. Okay. This is in case of those accounts which have a credit balance. Now, coming on to those accounts which have a debit balance, their nature is debit. So if you want to increase debit, you will debit it more. And if you want to decrease the debits, you will credit it. Am I clear? Okay. So kindly note this down. But this is nothing but the modern approach. Very simple. Each and every account you can classify either as a capital or a liability or an asset or expense or income. And then you know capital, liability and income have a credit balance. So if you want to increase credit, credit it more. If you want to decrease credit, debit. And expenses and asset have a debit balance. If you want to increase debit, debit it. If you want to decrease debit, credit it. Okay. Also, now see, these things are something which you will require in many chapters. But not directly, indirectly, but this you always have to know that. Again, I'll explain you using maths. That in maths, suppose in maths, what you all do? Plus 5 and plus 4. What is the answer? Plus 5 plus 4 is equal to? I say module sales is also given as real account. Rajkumar beta, again I've been telling you, I'll come on to the module. Right now, kindly don't see from there. Many things you might get confused right now. Okay. Yes. So plus 5 plus 4 is equal to plus 9. And plus 5, or I would say, wait, what happens? Minus 5 minus 4 is what? Minus 5 and minus 4 is what? Minus 9. Plus 5 plus 4 is plus 9. Minus 5 minus 4 is minus 9. Do you all agree? Yes. So what I want to tell you is that if the signs are same, plus plus or minus minus, then actually you are adding. Are you guys getting it? You are actually adding when the signs are same. That is addition which you are applying. And if it is plus 5 minus 4, or so the answer is plus 1, or minus 5 plus 4, so the answer is minus 1. Here you will see that whenever the signs change, plus minus or minus plus, then in that case, what you are doing is subtraction. Okay. Similarly, debit and debit is add, debit and credit is minus. And credit is add, credit and debit is minus. So whenever the signs are same, you add. So debit is also add. Credit is also add. If you want to increase credit, credit it more. But when I debit and credit, or if I credit and debit, two opposite signs, that means subtract. Okay. Am I clear? Yes, am I clear up till this point? Okay. Okay. So now finally we have learned what is the traditional approach, real, personal, nominal, where we apply the golden rules of accounting. For personal, it is debit the receiver, credit the giver. For real account, the rule is debit what comes in, credit what goes out. For nominal account, the rules is debit all expenses and losses, credit all incomes and gains. And then we have our modern classification where we said that assets are classified into capital, liability, income, assets and expenses. Assets and expenses have a debit balance, and if you want to increase debit, you will debit it more. If you want to decrease debit, you will credit it. And for capital, liability and income, it is a credit balance. If you want to increase credit, you will credit it. If you want to decrease credit, you will debit it. So now finally we've understood what should be debited, what should be credited. After this, now I would like to come on to the first stage of accounting, that is the recording stage. Why were we understanding what to be debited, what to be credited is because in accounts, whenever a transaction is entered, whenever a transaction is recorded in the books of accounts, there needs to be debit effect and a credit effect. Okay. Okay. Also, I would like to say that in one thing which came to my mind right now, it's not necessary that there will be one debit and only one credit. It's not necessary that there will be in each and every transaction there will be only one debit and only one credit is not necessary. In a transaction, there can be 2-3 debits or one credit, 1-2-3 credits, 2-3 debits. Anything is possible, but the total of debit and the total of credit after each transaction has to be equal. The LHS and the RHS has to be equal. Am I clear? Yes. So recording happens in the book of original entry, which is called the journal. Book of original entry. That is the journal. Okay. And the format of journal is something like this. So the format is date, particulars, LF, debit and credit. Okay, this is the format. Date, particulars, LF. Now what is LF? I'll come on to the point. Debit and credit. See, how we record in a journal, there is a proper format, and this is the format that for each and every transaction, you will have to see what all accounts are affected. And once you see what all accounts are affected, you will have to either classify as per traditional approach or as per modern approach, and you will have to apply the rules debit and credit. Okay, one thing, you use traditional approach or you use modern approach, whenever you will classify the accounts, your debit and credit has to come same. Matlab traditional and modern, the answers will be same. But the only point is traditional approach sometimes doesn't prove to be a very scientific method. That is why we'll prefer modern approach. But right now, from today itself, I'll not say that just shift on to modern approach. No, we will do questions with traditional approach also. Okay. Now, date is that you know that in recording, when we record in the book called journal, every day, each and every financial transaction, which is a business transaction which affects the financial position of business and can be measured in terms of money, is recorded chronologically. Chronologically means date-wise. Okay. Chronologically means what? Date-wise is recorded in the book of journal. Okay. Then in particulars, you write the account name. Which account got debited, which account got credited. How to write, we'll see once we see some transactions. Now, coming on to this LF. What is LF? LF is nothing but ledger folio. Ledger folio. Okay. What is ledger folio? I have not come up to ledger accounts up till yet. So once I make you understand what is ledger account, I'll tell you that what is ledger folio. I can just tell you folio means page number. Okay, folio means page number. But in detail, I'll explain you once we come to ledger account. Okay. Whatever account which we record the entry in journal, then we prepare a separate account. That is our classifying stage, which I'd mentioned on day one, recording, and then I'd come on to the word classifying, where account wise detail is maintained. So in this book, in this ledger book, where the account wise detail is maintained, we need to know what's the page number of this account. That is nothing but ledger folio, will come later on. And then the debit effects are here, the credit effects are here, and you'll see after each transaction the debits and credits will match. Okay. And last but not the least comes the narration. Narration starts with the word being, and it is just a kind of brief explanation. So right now we'll be discussing a few transactions, and then we'll come on to how to present those transactions in the book of journal. Okay, I'll come on to this point, but just at least note down in your registers that this is the format. Most of you must be knowing this, but still, date, particulars, LF, debit, credit, where date wise entries are maintained in this book. First time the books are recorded, the first time the transactions are recorded in the book called journal. Then LF for you guys, it will always be blank. Date, particulars, LF, debit and credit. And after each transaction, the total of debit and total of credit will be E. Okay. Are all of you with me up till here? Let me know once you're done, then we'll move ahead now. Okay. Okay, before I move ahead, how's the classes going up till now? What do you guys feel? Just tell me. Accounts. Are you all enjoying it? Are you all feeling that there is a value addition? Yes, what we used to do in 11th and 12th. See, when I sit in front of you, I have no aim that I should tell you, no, what you did in 11th, 12th is wrong only. It was not wrong. It was taught in a particular way. But yes, there are many things to it which we as chartered accountants will have to know a bit more than what we were taught. And that is what my aim is always. Interesting, Chala. I'm good to hear that. Okay. Okay. So now let us come on to a few transactions. Wait. Now, as you all can see, is this clear on your screen? But in fact, I'll not zoom in so much because then I'll not have any space to write. Okay, Is the screen clear to you all? Anand started business with cash. Is it clear? I'm coming on to a few transactions now. We'll be thinking from modern approach also. We'll be thinking from traditional approach also. Okay. So, Anand started business with cash. I'll note down again so that because... So the first one, keep on writing with me. Anand started business with cash. How will you think? So Anand is starting business. Tell me the two accounts which will get affected first of all. Which are the two accounts which will get affected? How much was the rupees? Rupees was 1 lakh. Anand started business with cash, rupees 1 lakh. I want you all to note down with me and quickly tell me what are the two accounts that get affected? We'll think from traditional approach side, we'll think from modern approach side. Cash and capital. Yes, Anand has started business, so he is capital and he has got cash. So the two accounts that are affected is cash and capital. Now, if I think from traditional approach, cash is a real account. What happens to this? Cash is a real account and capital is a representative personal account, right? It represents Anand. Okay. Now the rule for real account is debit what comes in. When we are recording in our books, we are thinking from business point of view. So from business point of view, cash is coming in the business. I hope all of you agree. I'm going very slow. Cash comes in the business. Okay. So debit what comes in. Hence I will debit it. And capital is a personal account. The rule is debit the receiver from business, credit the giver to business. Don't you think Anand gave amount to business? So Anand is the giver. Okay. Hence capital is credited. Right? This is as per traditional approach. And now the same thing if I think from modern approach. If I think from modern approach, see, cash is what? As per modern approach, tell me quickly. What is cash? Come on, quickly. What is cash? As per modern approach means you have to classify into a capital, asset, liability, income, expense. Very good. Very good. Cash is an asset. Okay. Is my asset of business increasing or decreasing? Yes, very good. All of you are perfectly correct. Asset. Is my asset increasing or decreasing? I am waiting. Asset of the business increasing or decreasing? Yes, increasing. So asset has a debit balance, and debit balance when it increases, we debit it, right? Similarly, capital. So in our modern approach, we have a word called capital itself. Capital has a credit balance. Yes, now tell me. Now I'm on to capital. Is the capital of business increasing or decreasing? From business point of view, the capital is increasing or decreasing? Yes, the capital is also increasing. Okay, the amount which is to be given back to the owner is increasing. So, capital is a credit balance. It increases. That is why credit. Okay, good. So, if I was supposed to pass a journal entry, my entry would have been, I'm ignoring the date right now. My entry would have been cash account debit to capital account. Ma'am, what is this to? That is a way of presentation, I would say, like now. Just a way of presentation, we write cash account debit to capital account. Instead of writing capital on the credit side, we write to capital account. So see, this was the LF, this was my debit, and this was my credit. So on my debit, I write cash account debit 1 lakh, and in my credit column, I write capital account credit 1 lakh. Am I clear? This is how you pass journal entries. Okay. And the narration, now the narration is being business started with cash. I told you narration is a brief explanation, very short. Explanation in very short that what has happened. So you'll say being business started with cash. Short explanation. Always in exam, whenever journal entries are asked, narration is a must. Okay. Narration is a must. Unless and until they tell you ignore narrations, which hardly they do in an exam. Always for any chapter when you will pass journal entries, you will have to write the narration. Okay. Being business commence. Yes, the patient can be as small as possible. Okay. Good. So I hope everyone have understood this point. Coming on to the next point now. Point number 2. Okay. Now I'll go a bit fast. Borrowed from Rahul. Come on, quickly. You all only tell me. Borrowed from Rahul. What will be the two accounts that get affected? Borrowed from Rahul. So I'm on point number 2. Borrowed from Rahul. Quickly. Can we write being cash brought into the business? Yes, Krishna. Narration can be written in your own language and in very short words. So it's okay. There is no fixed format that you have to write these 4-5 words. No, the meaning has to be clear. Okay, borrowed from Rahul. I'm getting cash, Rahul, cash, Rahul, cash, Rahul, cash, Rahul. Okay, almost of you have told me cash and Rahul. Okay, I would say, yeah, cash or bank, maybe whatever I've received. If nothing is mentioned, let us say cash account. I would say instead of writing Rahul account, let us write loan from Rahul. That is a much better way because see, as you guys know, loan from Rahul is a liability, a kind of loan. Whereas Rahul could have been my creditor also. Rahul could have been my supplier also. Are you all able to understand? So I would say Rahul account is a personal account and loan from Rahul account becomes a representative personal account. Loan from Rahul represents that you have taken loan from Rahul, but whatever it is, representative personal or natural personal, it is actually a personal account. So the rule for personal account will be applied. So cash, real account, loan from Rahul is a personal account. Now for real account, the rule is debit what comes in. So cash is coming in. Cash is coming in. That is why debit. And loan from Rahul, personal account. Debit the receiver, credit the giver. Again, Rahul has given us what? A loan. So he is the giver. Hence, it is credited. Okay. I hope it is clear. Now quickly from modern approach. So modern approach, again the accounts will be same. Cash account, loan from Rahul account. Now tell me, as per modern approach, what is cash and what is loan from Rahul? What is cash and what is loan from Rahul? Yes. Cash is asset increased. Okay. So Rajkumar says cash is an asset and asset increases. Since asset have a debit balance, it increases. So it is debit. And what is loan from Rahul? Yes, loan from Rahul is a liability. Liabilities have a credit balance and here the liability has also increased. That is why it is credit. Okay. Okay, I hope I am clear. Very good. Cash, asset, loan, liability. Very good. Yukta, Rajkumar, Krishna, Dipesh, everyone. Very good. Okay. Keep on writing with me. Now, next point. So now you know the entry. Entry would be, see right now, we are more concentrating on what will be debited as per traditional approach, modern approach, what will be credited. So now each and every time I am not writing these journal entries. We'll do journal entry questions. At that time, we'll just write journal entry questions. So these, I'm not writing like this way. Cash account debit to loan from Rahul account. Being amount borrowed from Rahul, or being loan taken from Rahul. Okay. That is why right now you must be noticing I am not concentrating on the amounts because these are simple journal entries. So the amount will be same on the debit and credit side. Then we'll go on to compound journal entries. What are compound journal entries? Since just the word has come, those entries where more than one account is either debited or credited, but the total of debit and credit remains the same. That will go slowly and steadily over there. Okay. Right now, point number 3, purchase machine. Quickly. Third point, purchase machine. I hope you all are writing with me. Purchase machine. Two accounts that get affected quickly. Purchase machinery. I want all of you to answer this question. There is a reason. See, again I'm saying, I know you guys know this, but there is a reason that I ask and I want everyone to answer. Some of you don't think that, okay, all of them are answering the same and my answer is the same. Still have the habit of answering. Okay. Even if you feel that most of the students, whatever they've answered, no, my answer is same, ma'am. That is why I'm not answering. Still have the habit of answering. Machine cash, machine cash, machine cash, machine cash. Okay, I'm good to see that not a single one of you said purchase. Very good. Machine is purchased. So we said respective machine account and cash account. Yes. And as per traditional approach, machine is a real account. Debit what comes in. So it comes in, that is why debit. Cash is also a real account, but it goes out. So cash is credit. Similarly, from modern approach, if I say modern approach, machine is an asset. Again, cash is also an asset. machine is increasing. Okay, so asset increase debit and asset decrease is credit. Okay, I hope this is clear. Yes, very good, very good, very good. So let's move ahead now. Point number 4. Purchased furniture from David on credit. Purchased furniture from David on credit rupees 25,000. Now tell me the entry for this. The two accounts that get affected. Purchase furniture from David on credit. Two accounts that get affected. I'll write also since you guys are writing. We will write it together. Purchased furniture from David on credit. Purchased furniture from David on credit. Okay, so I have got the answer as furniture debit to David, purchase and David. Okay, machine and David. So I've got furniture David, machine David, purchase David, furniture David. Okay. See, that's the reason I was telling you all to write the answers. Yes, it won't be purchase. Purchase word will come into picture when goods are purchased. And what are goods? When we are purchasing something for the purpose of resale and we regularly trade in it. Here, when they are saying the word furniture, and since nothing is mentioned in the question, these are simple journal entries, nothing is mentioned that what is Anand's business? Is he a furniture dealer or not? In that case, furniture, I will assume it to be his asset. Okay. Even Rajkumar, you said machine debit to David. See, you'll have to write furniture only. You cannot write machine. It's okay. It's okay. I know, and also see, I understand and I agree, ma'am. It was just a and I'm speaking, so it's a slip of tongue for me. So it's a typing error for you. Let you guys know what's the right answer is. Still, you are doing it wrong, but it's okay. I'll be happy when you do mistakes in front of me, provided the same mistakes are not repeated in exams. That's the reason I keep on telling you all. Answer, answer. Everyone do type. Though the answers your friends are saying and you are saying is same, still have the habit of answering, because if you believe no, I know, but in exam when you write, then there is simply, you saw me right now. I was writing accounting equation, and what did I write first time? Capital equity plus liabilities is equal to capital. It is assets, I know, but then since I keep on saying and then I keep on what should I say? I keep on explaining it more and more. So definitely I would have been saying that equity plus liabilities is equal to assets. And what is equity? Capital. So while I was writing this, instead of assets, I wrote capital. So that mistake can happen even from a teacher. Yeah, because I am also a human being. Okay. So please understand small things I'm saying so that now from today onwards you will get homework also. We are on a virtual mode where actually I won't be able to come and check. But the all the time and all the energy that we both of us are giving in the class, the only way to pass and the right way to use this energy effectively is whatever is being told, kindly do it. You are also seeing that how slow we are going. The start will be slow, because once this part is very clear, no, you'll never have a problem later on. Okay. See, so furniture debit to credit, mostly people were correct that the answers is furniture and David. Here we have purchased furniture on credit. Coming on to traditional approach, real account, furniture, and David is a natural personal. So debit what comes in, that is why furniture is debited, and David is a personal account, credit the giver. David is the giver of furniture, that is why credit, okay, comes in and giver. And as per modern approach, furniture is an asset and David is a liability. Okay. Furniture is an asset, David is a liability. So asset increases, that is why debit. Liability also increases, that is why credit. Okay, I hope I am clear. Right? Right? Are all of you there with me? Okay. Yes. Now, coming on to the next point. Next was purchase goods for cash. I am now point number 5. Purchase goods for cash. Now tell me, what will the entry be? Purchased goods for cash. Fifth one is purchased goods for cash. Yes, now since goods are purchased, our accounts will be purchase account and cash account. And like we had a discussion, purchase is a real account, cash is also a real account. Debit what comes in. Since goods are coming in, we will debit it. And since cash is going out, we will credit it. Even now see, all of you friends, now see, even from my modern approach, I will say purchase of goods is my asset only. I'm not changing. I'm not saying it's an expense. The logic is same here. Right now, the goods are my asset till the time I sell it. So purchase is my asset. Asset increases, debit. And cash is my asset. But here my cash is going out. My asset decreases. That is why credit. Okay. I hope I am clear with the traditional and the modern approach. Right? Then going on to the next one. All of you are writing with me. Going on to the next one. Purchase goods from Ram on credit. Coming on to sixth one. Purchased goods from Ram on credit. Now tell me. Purchase goods from Ram on credit. Purchased goods from Ram on credit. So it will be purchase and Ram. Yes. Purchase is a real account. Ram is a personal account. Real account, debit what comes in. So debit. Ram is a personal account. Debit the receiver. Credit the giver. Here Ram is a giver. He gave us goods. So credit the giver. Okay. And then coming on to purchases. Goods are purchased. So it's my asset. Asset increases debit. And Ram is what? Ram is a liability. Liability increases. That is why credit. I have to pay to Ram. I've got goods, but I have not paid him yet. So liability increases credit. Okay. Some basic journal entries, but all of these have to be repeated once. Right? I believe now no one is having any doubts up till here. Let's move ahead. Sold goods for cash. Seventh point. Sold goods for cash. Seventh. Sold goods for cash. Quickly tell me the two accounts which will get affected. Okay, I've got one answer as cash to sales. Cash to sales. Okay. Sales and cash. Okay. Good. Good. So the two accounts that are affected is, first of all, when I'm selling goods for cash, I'm receiving cash and the goods are being sold. So whenever the goods are sold, we open a sales account. And now cash is a real account. Debit what comes in. So we'll debit it because cash is coming in. And sales is my income. Sales is a nominal account. Debit the expense and losses, credit the income. So cash debit to sales. Okay. Cash account debit to sales. And from modern approach, cash is an asset. Asset increases. Thus it is debited. Sales is an income. Income is a credit balance. Okay, sales is an income. Income is a credit balance. So, and when income increases, credit. Ma'am, you must allow science stream friends to say answers. But yes, Rajkumar, very good point. But right now, I believe only Yukta is from science, and I've been noticing she's been answering very well. So when you guys will be doing homework at that time, then it'll be, all of you will be doing alone independently. So that will be a good way that we can just judge that are you all able to understand whatever has happened up till now. Okay. But yes, a very good point. Always we should help. Right. I hope everyone is clear up till here. Okay. Now, next, sold goods to Sham on credit. Sold goods to Sham on credit. Sold goods to Sham on credit. Good, good. See, I keep noticing each one of you. Whenever I see your names, no, I keep noticing who is answering, how much he or she answering. I know each and everything. Sold goods to Sham on credit. Yes. Now I'm getting the two accounts as everyone is correct. I'm getting the two accounts as Sham and I'm getting sales. Okay. So Sham is a personal account and debit the receiver. He is the receiver of goods. So I will debit him, debit the receiver, Sham account debit. And sales is my nominal account. Credit the income. So I will credit income. Okay. Rajkumar, since you have been using or using the module, I just wanted to know, have you already registered for the registered with the institute, and is the new module or is it for the November attend students? Because the module has changed from 2021 onwards. So if you're using the PDF, it's okay. That must be the recent which you've downloaded. But remember, we are now in for the 2021 batch. So the material has changed a bit. Okay. Just this thought came to my mind right now that use the updated material. Good, good. Okay, new one. Okay. And now, Sham, see, we've sold goods to Sham. So I'll have to think, is he my asset or a liability? When I've sold goods to him, I'm going to receive money. Correct? I've registered. Okay. But the new module. Okay, good. So I've sold goods. Is he my asset or my liability or what? As per modern approach, what is Sham? Tell me, Sham as per modern approach will be what? Yes, Sham will be an asset. Sham will be an asset and asset increases, so debit, and sales is my income. Income increases, that is why it is credit. Good, good. Next the point was that received rupees, let us assume sold goods to Sham on credit is rupees 30,000 and received rupees 20,000 from Sham. Received rupees 20,000 from Sham. Tell me the two accounts that will be affected. Yes, the entry would be cash and Sham. We have received the amount. So we have received amount. Cash is a real account. Debit what comes in. That is why cash will be debited. Sham is a personal account. Debit the receiver, credit the giver. Sham is the giver here. So credit the giver. Okay. Now cash is an asset. Asset increases, thus debit. Sham is an income. So sorry. So sorry. Sham was an asset. But now this asset Sham has decreased. That is why credit. Okay. right? Next, going on to the next one now. Next is withdrew cash from bank, or before that, since we have not deposited the amount, let us first deposit cash from bank. Deposited cash into bank. Let's say rupees 50,000. Yes, what will be the two accounts that get affected? Deposited cash into bank. Yes. So bank is a representative personal account and cash is a real account. Okay. Debit the receiver. Your bank has received. So debit. And cash is real account. Credit what goes out. It is going out. That is why credit. And as per modern approach, bank and cash both are our assets. But bank amount is increasing. That is why debit. Cash amount is decreasing. That is why credit. Clear? I hope all of you have reached with me, and I hope you all are writing. That is why I am also writing these points. Up till here, all of you are with me. Again, I am saying kindly stop me if you feel that I am going fast. I am trying that. I think this is a good pace, but still, if you feel that no, ma'am, kindly go slow or please wait, I'll wait. Okay. A few more we'll do before we end the class. Right? A few different types what we have not taken I'll take, so that in the next class then we are ready to move ahead with some more new there is one more concept which I want to explain you. Then there is about discounts which I want to explain you. So a bit more we'll do. Let us say rent paid through check. What will be the entry? Rent paid through check. Come on, tell me rent paid through check. Yes, very good. Bank to rent. Harsh, you've written bank to rent. That will be wrong. See, that is why right now, no, if you guys must have noticed, I am not asking you today what is to be debited and what is to be credited. Though all of you are answering me in the debit and credit format, but now Harsh, here you have gone wrong. Rent is my okay, nominal account. Rent is my nominal account, and we say debit the expenses. That is why rent will be debited. Okay, and since I paid through check, bank is the giver. Bank is a personal account. Credit the giver. So bank is credited. And even if from modern approach point of view, rent is my expense. Expenses, when they increase, it is debited. And bank is my asset. My amount in bank, cash at bank, is decreasing. Hence, it is credited. Clear? Okay. Then, one last I would like to do, though, yes, there are many different other types of entries also, but are all of you able to understand? Any one of you feel that I'm going fast, kindly stop me. Secondly, don't think that you know these entries. Okay. Please, I'm giving you time and I'm writing in detail so that the explanation and the reason matters more. And the same has to be your habit, that you have to think. These entries, I know, even if you close your eyes, even if you're not using your brains, you will know the answer, because since last 2 years you've been doing it. So somewhere it is a kind of memorized also. But do now understand that, are you knowing the logic behind what you're doing? Okay. Okay, so the last one for today is withdrew from bank for personal purpose. Withdrew from bank for personal purpose. Yes. What will be the again 10th one modern approach? Okay. 10th one, Dipesh, you mean this one. Deposited cash into bank, right? See, Dipesh, as per modern approach, yes, all of you keep answering for the point number 12. I will come on to your answers. Now, as per modern approach, cash at bank is also our asset. Okay, whatever our amount is there in the cash, whatever cash is there in our bank account is our asset for us. Unless and until you come to bank overdraft, right now I'm not coming to that. So whatever amount is there in my bank is my asset. Okay, and cash is also my asset. So when I'm depositing cash in my bank amount, the asset is increasing, hence it is debited. Cash is asset, but it is decreasing, hence it is credited. Is it clear, Dipesh? What doubt you had? If again you're not able to understand, kindly let me know that what's the problem. Okay, coming on to your point number 12, withdrew from bank for personal purpose. Good. Since it's written personal purpose, almost every one of you have written the word drawings account. Very good. Drawings account. Now tell me, as per traditional approach, what is drawing? Real, personal or nominal? And another is bank. Last one, tell me, as per traditional approach, drawing is real, personal or nominal? Yes. Personal. Rajkumar says personal. What about others? What about others? Tell me. Drawings is real, personal, nominal. You guys have been doing golden rules of accounting. Yes, drawings is a representative personal account. It is a but we don't have to write represent. It's a representative personal account. It represents what amount has the owner withdrew from business for his personal use. Whatever amount the owner has withdrawn. So it's a personal account, and as per traditional approach, even bank is a personal account. So debit the receiver. Drawings when the owner is receiving. That is why debit, and bank is the giver, hence credit. Okay. And as per modern approach, where will drawings come as per modern approach? Asset, liability, capital, income, expense. Yes. Yes, as per modern approach. Come on. Last point for today. Okay. You guys are saying drawings is an expense. Anyone having any other answer? Anyone having any other answer here? Look, please understand. No, drawings is not an expense, and that's because you will get interest on it. No. First of all, drawings is not your expense. What are expenses? Expenses is what amount we pay and we receive a benefit. We means whom? Business. Whatever I'm doing in accounts, I'm doing from business point of view. Now the owner withdrew for his personal purpose. Has it benefited the business? No, it has not benefited the business. Drawings comes under capital. Dear all my friends. One is saying not even liability. You should say it falls under capital. See, capital represents what the business has to give to owner. And drawings is a reduction in capital. I will not pay this amount because you've already withdrawn. Are you guys getting it? It's not even our asset. Asset means we'll receive some benefit in future. No. Are you guys getting it? Drawings will be a part of capital. It reduces capital. So capital decreases. That is why debit. Due to drawings, the capital decreases. Whatever business has to pay to the owner, it decreases because he withdrew some amount. Am I clear? And bank is an asset. Asset is also decreasing, hence credit. Okay. Okay. So I hope up till here everything was clear. And yes, I would like to give you a homework, but I'm just wondering. I'll make a Telegram group and then I'll send you the question which you have to do as a homework. Okay. So see, I'll just, instead of doing any question, in fact, I would say you do these points only from point number, I think mostly we've done up till 11th or 12th. From point number 13 will be your homework. I will be sending this page on the Telegram group also. There will be many entries which you all might not be able to do. And I know there are many things which I haven't discussed yet. Still, I would just want, in fact, not even the second page, just do this page from 13 to 26. These 13 entries you will be doing. I'll make a Telegram group and then I'll let you all know. So these 13 entries you just do. Tomorrow we'll first discuss this. Okay. That is all for today. Thank you so much. And if you have any doubts, I'll wait for 2 minutes. You can ask me your doubts or else take care. See you all. But just do your homework, please. And I don't want that when, since you are sitting like in front of a screen, I don't want tomorrow when I'm discussing at that time only you're doing, and maybe you're doing correct. It's not about doing it correctly. It's about sincerity, please. From day one, if we have that habit, now it will be really helpful. No, this PDF is not in the app, so I'll only send it. Okay. Thank you so much. Bye bye. Thank you. Bye.